How else might we move money from mom and dad to children? Family caregiver contracts turn out to be a good way of moving money. We all know long-term care is expensive. That's what motivated us to come learn about how to protect our money. Well, what if we didn't actually protect our money? What if we just paid our children to take care of us? Well, why would I pay my children to take care of me? For God's sake, they're my children. I brought them into the world. I clothed them and fed them and educated them and was nice to them and read them Christmas stories when Christmas rolled around. I was a good person. They should just want to take care of me for free. Well, there are a couple problems with that. Number one, they don't want to take care of you for free. They don't probably want to take care of you at all. They find the whole prospect icky, and they don't want to get involved with it. But some will, mostly the daughters. Daughters are the caregivers, sons are the Eagles are on. I got to go. I'll see you later, Dad. You know, I can say that. I'm a son. I'd rather go watch the Eagles game too. But if I'm going to have to pay somebody that I don't know to take care of my mom and dad, and they're probably not going to do as good a job as I would do, at least based on their emotional investment in my parent, well, why shouldn't I get paid? Why should I be treated worse than the complete stranger who comes and takes care of my mom or dad? Pays their bills, makes their lunches, does their vacuuming, does their laundry, carts them off to all their different doctor's appointments, picks up their prescriptions, loads up their little pill dispensers so they don't over-medicate themselves, cuts their grass, shovels their snow, balances their checkbook, makes sure they pay all their health insurance premiums on time, make sure all their claims get submitted properly, track down all the other stuff that it takes to manage someone's life when they're elderly and trying to navigate through things like Medicare and all that other good stuff. It's a lot of time, it's a lot of effort, and it's worth a lot. So, if I can transfer the money, and suppose I'm a child and I say, well, I don't even really want to get paid to do all this. I love my mom and dad, I just want to do it because I'm nice. Fine, be nice. Get paid and don't spend the money. Just keep it over there in your account, in a separate account. Call it mom and dad's account if you want to. I don't care. Put the money back over there. You own it, but now it's not mom and dad's money anymore. And we have moved, depending upon the amount of care you're providing, we could be moving thousands of dollars a month from mom and dad over to the child. We're not making a gift because we're earning this money. We're working for it. That's not a gift. They're getting something of equal value back in exchange for the money that they're paying to the child. And Medicaid says, that's cool, we don't object to that, but we have some rules. Because we know these families, they get together, they make little sweetheart deals, they do stuff, they backdate agreements, they do all kinds of things that aren't really good. If they behave like the companies that are out there providing these services for a profit, if they behave like those companies do, we will respect what they say is a compensated providing of care in exchange for money. And so they say we want to have a contract. So there's got to be a contract there. And we're going to move lots of money to the children without creating any gifting penalties. But we have to have a written agreement. If you went to hire comfort keepers or assured assistants or any of the other home health agencies, they're going to have you sign a contract. So Medicaid says, if we're going to treat this money that's moving from parent to child not as a gift, but as a payment for services rendered, we want to see the same kind of written contract. It's a really easy test to overcome. But you just have to have the magic piece of paper that says, this is a binding contract whereby son is going to do X, Y, and Z, and mom is going to pay Y number of dollars in exchange. They should say other things as well, but it's going to define what the child is going to do and what the child is not going to do. Very often, children who are providing this kind of care are going broke in the process. They're burning off all their sick days, all their personal days at work. Some of them may end up losing their jobs because they're taking too much time off to run around taking care of their parent. Maybe they have to go part-time in order to have the time to take care of the parent. So this is a wonderful way of relieving the financial hardship that they're going through providing this care. American families provide annually about $5 billion worth of uncompensated care to the older members of their family every year. $5 billion worth of care every year that they're not getting paid anything for. It's horrible for those families. This is a very nice way of relieving some of that, of that problem. It also creates a legal obligation for the child to provide the care, rather than, well, I'll do it when I feel like it and I won't if I don't. You actually can draft these contracts. They have a little teeth in them so that they have to do good care on a consistent basis. They're held to certain standards. That's not a bad thing, particularly if you're worried about situations of financial, or rather caregiver neglect and abuse. You can use these contracts to help build your case against the neglectful or abusive child who's providing the care. You can link these kinds of contracts to arrangements that families often want to enter into. Like, for example, I want to build a wing on my house. I put an addition on the house so that mom and dad can move in. They'll have their own bedroom. They'll have their own bathroom. They'll have a little place. But I don't have the money to build all that. Mom and dad do. So, well, I'll just have them give me the money to build that addition onto my house. Well, based on what I've told you tonight, how would you expect Medicaid would react to that little arrangement? Mom and dad move in for, 10 minutes before you ship them off to the nursing home, and now, instead of having this wonderful new addition for your parents to live in, you apparently have a new man cave. So, no, we're not real cool with that arrangement. But you can borrow the money from mom and dad to build that addition, and you can pay them back using the money that they're paying you for caregiving services. And none of that triggers any of Medicaid's wrath. So sometimes you can use these as ways of getting around problems that you otherwise want to have. What are the drawbacks? This is the big one right there. Payments to the child are taxable income. Oh my Lord. You mean I have to pay income tax on the money that my mom pays me to take care of her? Yes. Yes, you do. Why? Because that's what Comfort Keepers and Assured Assistance has to do. They pay tax. If you read the tax code, there's lots of little interesting things in there. One of the interesting things in the tax code says gifts are not income. If you look at the definition of income, which, for those of you who didn't want to know, is Section 61 of the Internal Revenue Code, there's a definition of what is income. And specifically exempted from the definition of income are gifts and inheritances. Okay. If you go further on to that definition, compensation for services is income. That's why we all get taxed on our money when we go to work. And we get that check, and we were supposed to get that big number at the top, but we only get that little number at the bottom, and all those other little deductions are coming out. Those are all taxes. You knew that. So, if payment for services is income, and gifts are not income, we can tell what you think your payment from mom is by figuring out how you chose to or not to report it on your tax return. If you put it on your tax return as income, well, obviously you think it was payment for services rendered. If you chose to omit it from your tax return, well, that would match the definition of an exclusion from income as a gift. So I don't care what your stupid little contract says. I measure your performance by how you put it on your tax return. If you're going to walk the walk, you got to talk the talk. Or actually the other way around. If you're going to talk the talk, you got to walk the walk. You got to put it on your return. The taxes you're going to be paying are not just income tax. They've now decided FICA tax, FUTA tax, all those little withholding taxes and stuff. So if you do this, you often wind up having to bring in accountants or payroll services to help you report all these payments correctly so that you don't wind up with a tax problem on the back end. Because even though Medicaid may not care that you didn't pay your FICA taxes, our friends at the Department of Revenue and the IRS sure will. So you have to engage in a process to do this correctly. The way I try and sometimes explain this If I were a crack dealer, and I wanted to go down somewhere in, I don't know, 8th and Oley in Reading, and I wanted to sell crack on the corner for money, I could probably do that without too much difficulty, except for the fact that the local crack dealer who owns that corner is going to be a little mad at me for cutting into his business. So, what's going to happen is, as I'm sitting out on the corner selling my crack, the Escalade is going to roll up, and the crack dealer who normally sells here is going to say to me, you have two choices, Bill. You can give me a cut of the action right now, because as it turns out, you're a pretty good crack salesman and you're selling more crack than I normally do. So you give me my cut, and I will let you continue to sell crack on my corner. If you don't, I will shoot you in the head and take your crack. Okay. If I want to make money selling crack, apparently I have to pay a cut to the local crack guy. So I do. Well, the IRS is just the local crack dealer. If you want to transfer wealth from parents to children and not run afoul of the Medicaid rules, you've got to pay the crack dealer his income tax cut. Yeah, but if I had to pay taxes, that makes me sad. Really? You were so sad during your working lives that you chose not to go to work so that you could avoid having to pay income tax and all those nasty wages you would have earned? No. We all go to work, we all make money, we all pay tax on it, we grumble about it, but we still do it because in the long run, that's how you make money in this country. And it's the same deal here. You get paid, you pay your tax, you cut the government in on their share to fund the Medicaid program, and you can take the rest of the money. You pay them, I don't know, maybe a third, and you keep 2/3. Again, 33% income tax versus a 100% nursing home tax. I'd take the income tax. The other thing they require is that children are going to have to document their services. You can't just say, I showed up and did mom's laundry. I mean, ultimately, that's kind of what you have to do, because there's nobody from the Department of Welfare wandering around watching you darn your mother's socks or whatever. So you have to keep a log. That's what care companies do. That's what Assured Assistance does. Their aides come in, they fill out a little sheet that says, I got here at 8:02, I did this, that and the other thing for this amount of time. They write all that stuff down. Children are going to have to do the same thing, to document what they've done. People don't like that, but that's how it has to be done. You generally do not want to have lump sum payments. I'm going to take care of you for the rest of your life. Next 5 years, the rest of your life, whatever. I'm going to take care of you, I promise. You give me $150,000 right now. It'll all work out. Medicaid does not generally go for that, because they're worried I might, as the paying parent, drop over dead the next day, and then child has gotten this huge windfall. So we generally don't do that. Getting paid by the month, getting paid on an hourly wage, those are generally more acceptable ways of getting paid. You want to have a contract that details what the parties are expected to do. You want to make sure that the contract anticipates problems between parent and child, because as it turns out, having your mom or dad move in with you or willing to live with your kids, not always all the fun that it's cracked up to be. Sometimes those wonderful little grandchildren turn into wonderful little grandchild monsters that you just want to get away from. And having something in your contract to talk about that might actually not be such a bad thing. So you can have a way of resolving some of those conflicts, kind of the Dr. Phil provisions. And you may have to involve an accounting firm or a payroll service to help you document all the tax payments under these contracts. Let's talk about crisis planning. What do we do when we've ignored all of this? We've not done a caregiver contract. Caregiver contracts, by the way, kind of straddle the line, because even after you go into the nursing home, you can still have a caregiver contract. I still want my kids showing up at all those care conferences at the nursing home. I still want them showing up to make sure that the nurses are actually taking care of me properly, feeding me, changing me, bathing me, doing whatever I'm supposed to get done, giving them my meds. The poor people that live in nursing homes and have no visitors tend to have an inferior level of care compared to the ones with active, engaged families. So again, if I need active, engaged families to come visit me at the nursing home, I don't mind paying them to do it. It's working out well for me, and I either pay them or I pay the nursing home So I'd rather pay them. I get bigger bang for my buck that way. So, with caregiver contracts, I might be in a crisis situation, but I might not. And about the only crisis planning technique that I really wanted to share with you tonight is one that's limited to married couples for the most part. We used to do a variation on this that involved single people, which was actually pretty cool, but they pretty well eliminated that. So, when you have one parent or one spouse going into the nursing home, one spouse staying home, we call the one going into the nursing home spouse. We're not very creative that way, but that's what we call them. We call the one who's staying home the community spouse. What we try and do when that happens, Medicaid will look at the couple's assets. They don't care whether they're owned by the husband or they're owned by the wife or they're owned by the couple jointly. They don't care. Titling of those is irrelevant. They just kind of look at them as one big pot of money. And they pretty well divide the pile. They give some to the wife who's staying at home. They give some to the husband who's going to be going into the nursing home. I won't bore you with the mathematics of how they divide the asset pile. Suffice it to say, it's not always an even split between the two. But once they've done that, they've split the money, they look at the husband in my example, who's the nursing home spouse, and they say, we have those 3 questions for you. Are you sick enough? Are you poor enough? Have you made any gifts? Well, if you're sitting there in the nursing home, you're sick enough, but if you're sitting there with a big pile of money that they've just slid in front of you, you're not poor enough yet. So is there some way that we could get rid of that money without making a gift? We're not going to be able to pay our kids that much that fast. So what else could we do to make that money go away? And the answer is, you use something called a SPIA, a single premium immediate annuity. You take that money, you walk it over to an insurance company, not just any insurance company, mind you, and not just any old annuity, a Medicaid compliant annuity, but you take that pile of money, let's say it's $100,000 that's sitting in front of Dad. You take the $100,000, you go to the insurance company, you give the insurance company the $100,000. The insurance company says, thank you. In exchange for your having given us this money, we will give wife a promise. The promise is we'll mail her a check every month for a fixed period of time, which we will now tell you, I don't know, I'll make up a number, 72 months. We'll send you a check for the next 72 months in the amount of $668.97. If she lives the 72 months, she'll collect every single one of those checks. And although I suspect my math is not very good in my example, the idea is if you multiply that check that she gets every month by 72, it'll add back up to the $100,000 that you just gave the insurance company, plus actually a little bit of interest. So now, because we bought this annuity, the money that was sitting in front of Dad is gone. It's turned into an income stream that's payable to Mom. He's now sick enough and poor enough to qualify for Medicaid, and assuming he didn't do anything else, he hasn't made any gifts. So he goes right on Medicaid right away. He otherwise would have had to spend that $100,000 at the nursing home. But he didn't have to do that because he bought this annuity. Now, this is not the kind of annuity you can pick up from your local annuity guy. It's not. It is a very specific product. It's really only sold in Pennsylvania. We only have 2 places we can go to even find these things. And if anybody tells you otherwise, they don't know what they're talking about. So what I just explained to you is kind of what's on this chart, but it is a way of converting savings that are keeping you off of Medicaid into a stream of income for your spouse that will allow you to get on to Medicaid. It works quite well. Sometimes, according to Medicaid, it works a little too well, but they keep litigating over that and they keep losing, so we keep using them. And we're taking money that otherwise would have been spent down, and we're creating something for the benefit of the spouse who's at home, thereby improving, in my example, the wife's financial security.